Hello, everyone. Welcome back to How to Trade. I'm Shane Vernier, and this is the Wednesday strategy session. Today, we're going to cover the 9 EMA strategy with RSI confirmation. We're also going to take a look at a 920 setup that's interesting. That's a basic crossover with RSI. We're also going to talk a little bit of Fibonacci. We've got some trade ideas to recap. We've got a big news story. The media is going absolutely crazy, and we're going to sort of show you where to find some of these strategies that we've been talking about over the past, year or so, or at least the last 6 months. So it's good to see everybody back in the room, see some new faces over on YouTube. So good to see everybody there. Some of the seasoned vets here in the trading room. Good to see a double. Always welcome. JC, always welcome, guys. I got a stack of private messages in my mailbox. I'll be sure to get to those right after we're done with this live stream. We've been doing a lot today. Really a lot going on in the market. So right now, I think a good place to start is sort of with a basic trade follow-up. Now, we put these, I get asked the question every single day, do you guys do signals? Do you have signals? Do you have signals? And I go, no, we don't have signals. What we have is actionable trade ideas. And a lot of people are going to say, well, they're basically trading signals. And I'd say, no, they're not trading signals because they're more, they're based more on my approach to the market within about 3 or 4 different I would say vantage points, and they're definitely not any sort of canned cookie cutter black box system. So we're not signal providers here, but we do put out some trade ideas, and I always think it's important to stand behind what you put out. What we don't do is we don't run from losing trades, but we also like to highlight when we're correct. This year, this was the first trade idea that's gone live, and this is one of those things that you always have to remember. It pays to wait. We get paid to wait. We don't get paid to trade, and this trade idea is a fantastic example of that. Resistance in view for U.S. oil. We had 75, I believe it was 75.24s were our sells, and boy howdy did we hit this one right on the top. We're trading down to about 73.30 after an epic run right up to our entry point. Our entry point right there is about 75.26. We called the top of this thing within about 2 pips. So I always like to lean into some of the good things, but we do focus on the losers here because it's important. You learn from losing. You lose money, you learn. Always remember, you pay for information when you lose. You don't just throw it into the dustbin. It's important that we understand exactly how trading works. This is sort of a feature that we've been working on. I've been working on for a while here, and it's a basic spreadsheet. We're going to stick with this one for a while. You can see right there, what do we have going here in this U.S. oil? Resistance in view for U.S. oil. That was the trade idea, the dates on there. Also the product, it was a buy or a sell, our entry point and our exit, our initial risk. Now, I designed these trade ideas with an initial risk of 1-to-1. So if I'm looking, if my key level's out there and we're looking for about 74 pips on the trade, then my stop loss is going to be 74 pips. Now, in essence, do we do that in the live market? You can certainly streamline your approach to be a heck of a lot better than that by moving your stop with market structure. The problem is that I'm not online with you guys 24 hours a day, and we can't really do something like that in real time. So this is an interesting type of a trade. It went down. I got 74, 1-to-1 risk versus reward. It got 74 pips there, 1-to-2 cashed in, so that's a bit of a typo, but it came in with another 74, so it's up about 148 pips, and right now we're working on a 1-to-3 type of success. So these are all the trade ideas we put out this year in January. I'm going to go ahead and focus on this one. The US dollar Japanese yen trade idea that we put out the other day did not bite, meaning it was a Fibonacci retracement pullback buy, and the market is pushed higher. We may revisit the dollar yen later in the week, maybe for another trade idea, but as of right now, that result is NA. It's off the board because our swing high got taken out. Easy peasy. We'll be referencing this a little bit as we move along later this year, but that's a pretty good trade. U.S. oil is definitely on the board. If you want to trade any of these ideas, check out switchmarkets.com. It's one of those places where you can go to trade anything you want to trade. Serves most international municipalities. If you're in the United States, swing by our partner broker, Owanda. Owanda is definitely one that we direct a lot of U.S. clients to. All right, now I want to start with a Fibonacci trade, and then we're going to get into our 9 EMA and get into potentially a news story or two. We just got to wait and see exactly how much time it takes me to break down this trade. U.S. oil right now, 30-minute chart. All right, 30-minute chart. We've got aggressive selling. We've already cashed in on the big sell. The big dirty up there was about 75.26. Nice big sell-off, and now we're coming off. And now we've got that textbook L formation. What is an L formation? It's a run and a rotate. So if I'm trading Fibonacci's today, I'm very aware we're in the U.S. session. That's where all the volume is. My Fibonacci late day trade is very simple. Spike high there to my intraday low. There's my basic L formation. Set up beautifully. Bang, bang. Where am I looking to sell? 38%. Absolutely. The market's off about 1.5% right now. I'm selling U.S. oil right there from 73.68, somewhere in that zone. That's an aggressive trade. That's a trend following trade. Do I believe oil's going lower? Not necessarily today. Over the long term, yes, I do. But today, remember, if we get good market entry or good trade location, you don't have to be right about the trend. You can get in there, grab a nice little scalp, late day scalp, and be able to cash in. So, like I said, if I trade in U.S. oil, and I use futures contracts so I don't have to contend with the spread. But something like this right here could be absolutely fantastic. Spike high, spike low. It's the same pricing dynamic. It's the same market structure. All we're looking to do is to get in on a few pips, a few ticks in this case. For futures or ticks, 4 extra pips. What do I want to do? I want to sell. 73 is my level here on this. We go right here to our trade, order. What do I want to do? I want to have a sell limit order, and I want to go about 1 tick beneath that. I'll go about 72. It's important that you get your prices when you're trading a 30-minute chart during the U.S. session. Very, very important. There's your sell limit order, 1 unit. Let's go ahead with a take profit. I'm going to go ahead and I'm taking 8 ticks, and my stop loss is going to be an extremely tight. And I mean an extremely tight 7 ticks, a little bit better payoff there. And we're going to go ahead and put that sell in the queue, and we're ready. We're ready to go. Our sell order's right there at 72. We're looking to grab that trade. Late day, you've got about another hour and a half of good crude oil trading. But if, in fact, we do wipe out that low, 73.22, then we're going to have to reset our Fibonacci's and potentially come back for a trade. That won't be the best. We want to see it rally from here, go up, give us a shot to sell that thing in the next 90 minutes. That's a pretty darn good setup. Something to think about there. And while we're on the crude oil subject, U.S. dollar, Canadian dollar. This was one that we covered yesterday. This is the Bollinger W strategy. And it's very important to understand that our strategies, we've got a lot of strategies out there that are floating around on YouTube. We've got a lot of strategies also in our trading room. So let's go ahead and take a look at our trading room. Right here in our academy, we've got all sorts of short-term price action strategies. We covered a pendulum trade yesterday that wasn't elected on the Great Britain pound euro. That one actually broke out. Fantastic move. We just, pendulum, we were expecting it to be flat, got to move. Right there, the W though, Bollinger W, you click on that, shows you exactly how to trade this strategy, and this was a darn good one. I mean, this was a darn good one. Nice big sell-off. We covered this yesterday. First low is outside of the brackets, the lower Bollinger Band, bang. There's your pullback. We came down. The second low was close. It was close, but it was inside the Bollinger Bands, and then we bought in right there on that big green bar. And since then, it's been a pretty darn good trade. We put on 250,000 as far as our forex lot size was concerned. I don't really think in terms of lot size. I think in terms of position size. So we're sort of long 250 on this pair, this dollar CAD. Right now, I would say that I love taking money. We've got a pretty good bullish run. Wherever your profit target needs to be, you can certainly put it there. I would recommend that if you took this trade, move your your stop loss to break even. I don't want to see anybody get burned. That's the number one rule of trading. This would make a good clip. The number one rule of trading is never make a winner a loser. If you make winners losers, you will lose in the long run. We got a nice big bullish move on the dollar CAD right here. We're up about $700. I don't have any problem at all taking the profits. No problem at all. Ring the cash register, move on for another day. All right, now here we go with a different trade idea that we have out earlier today. I know I'm covering this. We're getting into the strategies here in just a second. We put this one out earlier today. This will be on our list on our spreadsheet. I'm playing a breakout here. I'm looking to play a breakout on this New Zealand dollar, U.S. dollar beneath 2024's low down there at 55.87. We're going to get aggressive with this one. If we get a washout here, we got an opportunity really to fill in a fantastic void. It's a fantastic void. It's like that old song, Fantastic Voyage. This is a fantastic void right there. That's a good void right down to about 55.20. I don't even want to press my luck. I don't need to press my luck. We're going to look at getting out right there, 55, something like that. Give ourselves a shot and maybe a nice quick scalp. And then what we can do after that is if, in fact, we get paid off on our scalp, which I think we got a good shot of doing, then we can start selling pullbacks and taking a shot for 2022's low and potentially even that COVID panic low. I love the Kiwi. This is a fascinating pair. I am shocked to see the Kiwi doing this poorly against the U.S. dollar. I really am. That really says where the dollar's headed and where we think monetary policy is going to be. Definitely something to look at there. Okay, guys, that's enough trade ideas out of me for right now. I want to talk strategy, though, and it's like that old, I'm talking old songs today, so I must be waxing poetic, but there was an old Madonna song, if you know the notes to sing, you can sing most anything. That's what a strategy is all about. It'll teach you how to approach a market and trade it. Now, this is on our YouTube channel. We've got a tremendous amount. This is a Fibonacci time zone. It's got a great compliment on this one. If you like the time zone stuff, I've got some ideas on how we can incorporate Fibonacci retracement of time zones and maybe build a crosshair strategy. I don't know. I got to run that one by corporate first because that's going to take a lot of work to develop, but it was an idea that I had while we were making that video. In any case, there's a lot of strategies here. The 920 you guys really like. Today, we're going to really look at the 9. Some of these no one's ever seen. The rally-based rally, fantastic strategy. They're inversion value gaps, a lot of smart money concept stuff. Triple moving averages, we're going to dive deeper into that. I love that 5-8-13, watching one on the euro right now. But if you wanted to get into this 9 EMA, I get a lot of good feedback on the 9 EMA, and I get a lot of heckling on the 9 EMA. But people seem to really like it. This is a very basic way to trade the 9 EMA. Today, we're taking it to the next level. We're going to be much more advanced. We're going to be much more advanced. And how we're going to do that is we're going to add confirmation, and we're going to start to understand what it means to actually place a trade with good risk versus rewards, good stop losses, and actually have the ability to maybe take some money out of this market, not just today, not just tomorrow, but in July. I want everybody sitting around in July going, wow, I already hit my yearly number. I'm ready to either take the rest of the year off, or maybe next year's goal is going to be a little bit higher. Can this strategy help you do that? It can. Now I always love the hecklers. I always love the negative feedback because a lot of it is rooted in truth. There's a lot of problems with the 9 EMA, the way that it's presented in the video. So the question is, Shane, why'd you put that out? We put it out because it's a place to begin. There's going to be more 9 EMA videos coming out in the coming months. We're going to do one with pullbacks where I can show you exactly how to optimize your trade entry. We're going to talk about different ways to manage these trades. We're going to talk about confirmation, which is what we're going to do today. I've been doing a lot of RSI confirmation because I believe the momentum algorithms, the momentum oscillators really complement the 9 EMA. They really do, because think about it. What's your 9 EMA? It's a short-term EMA. It's showing us what price action's doing right now and which way price is moving right now. All right. Is it a lagging indicator? Of course, all indicators are lagging indicators. But when we use our head, we know when to trade. We know when the volume's coming in. We understand when the economic events are coming. We understand that maybe our confirmation can get us into great trades. Dial in on the right time frame. What is the right time frame to trade the 9 EMA strategy on the Forex? In my view, it's the 4-hour chart or the daily chart. I think those give you the best opportunity for success. Now, the Euro USD, this trade right here, this is a 4-hour chart. You can see right here, we're going to sort of reverse engineer this thing. There's our RSI confirmation. Remember, RSI, when we're overbought, we're over 70, and when we're oversold, we're under 30. Under 30 is a buy, and you can see right there we're shaded. We've got a nice big red shade going. This thing was heavily oversold last Thursday. January 2nd to open the year. So what did we get? Oversold. What does that tell us? Buy the market. Now, the way that we presented the strategy in the video was very simple. Get a candle close above your 9 EMA, go long. I took a lot of heat for that. A lot of traders did not like that. And I said, well, yeah, but can it work? Yeah, it can work. It's all about your risk versus reward, though. So the thing about moving average strategies that everybody needs to understand is they're not necessarily designed to help you scalp. I think horizontal support and resistance levels are far greater, far more powerful as a scalping tool. These things are designed to get you into good day trades and maybe even swing trades. This is a 4-hour chart. This is a swing trade. Now, if we're looking at getting into this thing and taking a position, I'd say, okay, right there, we're looking to buy. Where did we buy? We bought right there. We bought right there Friday, the 3rd of January at 11 a.m. So that would have been the morning, bang, right there. That would have been your long. So we're just going to put some horizontal lines down, sort of break down this trade, and then we're going hunting for real trades right now. Let's go right there. So that would have been your entry. Your initial stop loss, this is very important. With these trades, I highly recommend not playing them too tight. If you play them too tight, you're probably going to miss out on the big move just because sometimes you can get stopped out. Now, a lot of traders would tell me, listen, I'm going right here. I'm going long, and as soon as I buy, if I get a candle close beneath that 9 EMA, I'm gone. Okay, that's one way to do it. Another way, and the way that I favor, is your stop loss should be either around one of these swing lows, either the macro market state, this would be the end of your bearish market structure here, or you could play it real tight beneath that swing low. The one that's going to put you into the greatest number of winning trades, especially with a moving average strategy, is going to be beneath the market structure. Now, what would our risk be right here? Our entry point would have been right on the close, 103.09. What's that? 102.22. 87 pips. That's big. That's a significant risk. That's a significant risk. How can we account for that risk? Well, we've either got to get paid off, meaning the market's got to move 87 pips in our favor, or we bring our stop loss up here. If we're going to make this a true position trade, then we're probably going to have to dial our risk down, dial our leverage down to between 1% to 3% of your account balance. And the way you do that is you just trade smaller size, you get in the market, and you just take a shot. So if we did that, did we at least get a 1-to-1 payoff? Well, I mean, maybe we did, maybe we didn't. Let's go ahead and look. That would have been 80. What is that? 87, something like that. If we went long at 103.08 and 102.22, what is that? Roughly 78 plus 8, it's 90, 86. So 86, we would have had to get 96, 103.96. We would have had to get just to get a 1-to-1. Now, this is the other thing that a lot of people really have a problem with. They don't like it. They say, Shane, it's only a 1-to-1. That's not going to get me where I need to go. Okay, that's fine. You don't have to use a 1-to-1. But here's what I would recommend. If you're going to trade something that's it's a trend-following strategy, you have to respect the first rule of trading. Never make a winner or a loser. And if somebody went long here and they went up and hit their 1-to-1 and they gave all this money back, not only are you financially in trouble, now you're hoping the market goes back and we can see that, well, price is down beneath our 9 EMA and may or may not go back. All right. What about your mentality? Where are you at mentally after giving back a big gain? If you give back a big gain and it turns into a loser, comes down and takes you out, you're not only financially hit, but you're psychologically hit. Can't do it. You can't do it. What do? If it goes 1-to-1, you can move your position to break even. If nothing else, you didn't catch the big 1-to-3, 1-to-4, 1-to-5 runner. At least you didn't lose any money. Now, the other way you can do this is play these real tight, something like that, and shoot for the moon. Shoot for 1-to-3s and 1-to-4s all day. You go 1-to-1 or 1-to-2, move to break even. You can do that. I don't have a problem with any of it. If you're going to do this stuff, be consistent. If you're not consistent, you're going to get slaughtered. So that's the 9 EMA. Those are the things you need to be thinking about as you trade it. Like I said, took a lot of heat for that video because the people were like, that's too simple. If you trade like that, you're going to lose money. And I go, you're going to need to know more. You're going to need to manage your risk. I contend that it can be done. Correct time frame. Highly recommend the 4-hour for the Forex pairs. Let's say we want to get a little bit more aggressive. All right. Let's dial up a CFD product. Here's the US 500 30-minute chart. My favorite time to trade this thing is really during the U.S. session. U.S. 500 during the U.S. session is when you're going to see the trading volumes really return right there, starting right about there, opening bell, ding, ding. So do we have a signal during the U.S. session? No, we don't. Why? Well, we were oversold here. Okay, that was pre-U.S. session. That was right around 5 a.m. my time, 7 a.m. So theoretically, you could say, okay, I want to buy this market. And I would say you can buy it, but what I would really recommend is there is no volume during that overnight. I would wait. I would wait for the opening bell and wait for a fresh signal. Now, here's the deal. If you're going to trade the U.S. equities indices, trade them during the U.S. session. If you want to use your intraday time frames, you can use the 5-minute, the 15, or the 30-minute. Highly recommend that. Right here, good example of that. You say, Shane, with a 30-minute chart, I'm not going to get any signals. What are the odds of it getting into overbought or oversold territory and then crossing back over in the same day? It happens. Let's look at how else we can trade it. Let's dial this thing down to a 5-minute chart. We got our 9 EMA rocking and rolling. Have we got a trade yet? Nope. We were oversold there. Okay, that's during the U.S. pre-market before all our numbers. Our ADP employment report came out. Interest rates, MBA 30-year mortgages came out during the pre-market. Where would we be looking to trade? Didn't really get one during the U.S. session. What about that right there? Close but no cigarette. We're close. We're close. Now remember what I said. If you know how to trade this thing, we're looking for confirmation and then a crossover, and then price to break above the 9 EMA or below it, then we're looking to go. We can apply that to anything. U.S. indices, do it during the U.S. session. Look at the 5-minute chart. Let's go find another trade. U.S. 100, what's happened today? Oh, baby. Right there. Did we get a trade? Wish I could move these just a little bit better without my cursor getting in the way. That right down there, it's beneath my sort of my arrows there, but right there where the cursor is, where's our RSI at? It's close. It's 29.48. That's beneath 30. If you're aggressive, you can do it. All right, where's our crossover? Did we get a close right there above it? 21.066.9. Where was our close right there? 21.070. It's close. I would have waited for the next bar. It's got to be obvious. It's got to be easy. Right there, that was your entry. You're on a pretty good little runner here once again. Bang. Stop loss. That's a 5-minute trade. You're still long. You could be doing this with a fixed risk versus reward, 1-to-1, 1-to-2, 1-to-3, or you could really shoot for market structure. And if you were going to play market structure, that would be your goal up there. All right, let's see if we can find something else. Do we have anything at all that we can trade right now that'll give us a shot with this approach? Pretty good right here, a little double bottom. So that would have been a signal to buy back just about 15 minutes after the open. Right there, there would have been your bid. You would have bid right there. Did you get stopped out? It's close. Where's your stop out point? Right beneath that swing low? Something like that. I think you survived. Then what? Then you got your move. Really love that previous swing low. That's how I would be basing these trades. This is 5-minute charts. This is 5-minute trading. All right, let's find something else. Here's a pretty good one. Nobody really likes to trade the Euro FX futures. I do. I think they're pretty good. On a 5-minute chart, it's a little much. You can see we haven't had a trade today. That right there potentially could have been a good one. I don't know why we clicked the US 30 right here. Back at 4:30. My time, 6:30 a.m. Eastern. Pretty good time to be trading currencies. It's right during that London-US overlap. That's the time if you're going to trade a 5-minute chart on a currency pair or currency futures. That's when you're going to be looking to do it on the Euro USD. Something like that. Big time crash, oversold territory. Where would have been your long? Your long would have been right there. Bang. Where would your stop out have been? Beneath market structure. That's why I recommend if you go down to the small time frames, very important that you respect market structure and don't play these too tight. If you do, I'm almost guarantee you'll lose. Almost guarantee you'll lose. Right there, though, you got a pretty good little trade. You bought in right there at 103.280, and you're up at 103.410. That's 13 divided by 2. That's about 26 ticks. It's 625 a tick. That's not bad. That's not bad work. Not bad at all. Not bad at all. So definitely something to think about there if, in fact, you're interested in, well, it's actually more than that. It's hard doing these because they're in fractional ticks. I'll just pull up a DOM for you real quick, and you can see. I mean, it gets pretty tough trading Euro FX futures. That's why a lot of folks don't like it. It's just too hard. All right, let's find something else. Is there any Forex pairs we could look at? Is there anything moving right now that we could really get after? I know we can get after gold. Let's go ahead. Let's pull a gold. Let's go ahead and pull a gold chart. All right, here we go. All right, what do we got? Back here, we were in oversold. Okay, right now we're in oversold territory. What do we have? We're in oversold, beneath 30. Right there's going to be your stop out. We're looking to go long. That would have been your long. Now, let's say we missed the long. Let's say we missed the long. We did miss the long. We didn't see it. Okay. What can we do? How about a little Fibonacci retracement? Spike low, swing low, right there to your high. Well, that's above the bar. I should have bought. Well, let's say you didn't want to buy right there. Let's say that risk was too big for you. Wait for a retracement. Let's buy right now and see what happens. Let's go order 1,000 units. Just go ahead and buy it. Okay, we're officially long, and that's a huge position. This is video game money. We will trade real money. I promise you that. But right now, probably going to start that next week. But right here, this is video game money. Don't get too carried away with the leverage. So we're long. One of the good things about this is right there. Is there anything different? Well, price reversed back down, and this sort of used it as resistance, sort of acted as resistance. Yeah, maybe it did. Doesn't mean we can't go up and close above it. This move isn't over. Oversold territory. We're threatening the 9 EMA. We crushed the 9 EMA. We know where we've got to get out of the market, right down here beneath our swing low. And now we're looking for a number of things. We could go 1-to-1, something like that. We go 1-to-2. We can shoot for the top of market structure up here, which is about 26.68. The big thing is just dialing your leverage in. Do I want to be long or short right now? The system says go long. 9 EMA, confirmation, we're on a bid. We just used a Fibonacci retracement sequence to improve our entry, which I kind of highly recommend. I think we're going to build a video on that. Do we have a good chance to win? We got a great chance to win. And even if we don't win, our risk is accounted for. We're in, we're out. Our stop loss is down there beneath 26.4950. We're looking to really see this thing get up. And right now we're starting to see a little bit of price action that we want to see. This is 5-minute gold trading. Not the best time of day to be doing this. It's not. You want to be trading gold, definitely. If you're going to be trading spot gold on a 5-minute time frame, you're going to want to do that between that London-New York overlap. So you want to be during the tail end of the London session and right there at the beginning of the New York Open. All right, let's have a look. I got way behind on the live chat, guys. Hey, Julian Lab, hi from France. How you doing, Julian? Sorry I missed you for the last 10 minutes. Let me see. Lebo, hi, Shane. Is there a one-size-fits-all indicator, or do I have to use specific indicators under specific trading conditions? There's no one-size-fits-all indicator. Most traders now are using price action. They use smart money concepts. They use ICT concepts. I'm not a big fan of that stuff, but I do understand market structure and what exactly has to happen for us to win trades. As retail traders, we need a couple of things. We need maximum liquidity, and we need volatility. That means that we're going to either need to trade, if we're going to scalp 5-minute charts, 30-minute charts, 1-minute charts, that means that we have to be in the markets when they're at their most active. Now, if we're swing traders, there's some swing trades out there that can make you a lot of money. And I sort of favor that way of trading, just getting great trade location and looking to build these bigger profits over a little bit of period of time, especially in the Forex pairs. Now, in the markets, in the futures markets, I'm not going to lie to anybody. If I'm in the market for more than 30 seconds, I don't feel like I've done my job. That's very fast breakout trading. That's tight scalping, but that's for futures during the U.S. session. Now, for your Forex pairs, we're talking about 4-hour charts. Those are position trades. Those are position trades that, boy, if you nail your entry and you're smart with your economic calendar, then you have a chance to win. If you miss something like an NFP number dropping Friday, you're going to get shredded. More than likely, you could be on the right side. You could be on the wrong side. But more times than not, you'll find if you miss something and you miss a big fundamental market mover, you're going to get crushed. So the answer, Lebo, is no. There's not a one-size-fits-all indicator. I always recommend this. This may be a good clip too. Here's the number one thing you need to do. You need to choose a strategy that makes sense to you and then apply your proper risk management. If you do those things, it's tough to lose. It's all about consistency in this game, guys, and we'll see exactly what happens during NFP. If we can be consistent live, I'm pretty sure that we can. Pretty confident we can. In any case, that's the 9 EMA. That's a gold trade. We're sort of watching that one closely. You could have got a little bit better entry. You could have waited for a big-time drawdown here. The argument is, well, is the move over? You know, we're beneath the EMA. I don't think it's over. Not in this time frame. Something to think about there. All right, everybody, let's see if we can find, let's go. That's enough of those. I definitely want to show you this one before I sign off today. This was a 920 EMA crossover, and I think I forgot to do it yesterday. I don't really remember. We do so many live streams and videos and things right there. So there's your 920 EMA crossover. Now, the 920 was another popular video. A lot of people really liked the 920. But then again, there was a lot of folks that saw flaws in the way that it was presented. And just remember, unless we're going to make a 2-hour video, it's really tough to cover every single thing. This was the 920 EMA. Now, what we've done really since then is we've added a lot of concepts. And this RSI confirmation is lethal with the 920 crossover. Now, if you're trading the 920 crossover without any confirmation, do it during the most active times. The most active times. High volume, high liquidity. Have to have it, especially if you're going to use it on short time frames. But as a swing trading approach, this is what a lot of institutional investors do. They look at daily charts. They look at the 50, 200 SMA crossover, golden cross, death cross, and they make their decisions accordingly. These indicators, things can be in hindsight, and I understand that. You go, Shane, you're in hindsight. And I go, I want to really show you guys how this stuff works. Back here, U.S. dollar index, back there in August, oversold in a big way, okay? Crossover develops right there. The 9 crosses the 20. There's your buy signal somewhere right around October. Holy cow, look at this. Well, we're in overbought territory now. Should we be looking to sell? Should we be looking to sell? Yeah, you should be. But you just got to wait for the 9 to cross under the 20. That's the beauty of some of these indicators and these systems. They keep you out of trouble. A lot of folks say, well, right there, okay, so we're looking to sell on that. I'd say, yeah, if you get the signal. The problem is the 9 never crossed the 20. It got close, but it never crossed it. So what's the biggest problem with a strategy like this? Believe me, criticize everything. Be skeptical of everything. What's the biggest problem here? The biggest problem is when the market goes flat. And traditionally, when you get into real short time frames, especially on something like this, look at this right here. Okay, that would have been your sell. We'd have been selling the dollar. There would have been your sell develop, probably right in there. Depends. Where's the crossover at? Crossover's right there, so you just sold here. What happened? Well, you got in on a decent move, but take a look. We've got crossovers. So take away our RSI for a minute. Let's say we're just trading crossovers. 5-minute chart, US dollar index. Okay, we got a pretty good move there if we're trading during the London session, the overnight. If you're overseas, if you're in the UK, you could have killed that one. But then look at this right here. Then we're selling, and then we're out, we're buying, and now we're selling, and then we're buying, and we're selling. It's a mess. That's what I call a weave, a crossover weave, a moving average weave. Frequent crossovers absolutely crush you, especially trading this stuff. That's why I highly recommend using some form of confirmation or be looking to get in with a little bit better trade location and be very diligent with your stops. Meaning, if you were going to sell, let's say you were going to sell right here on this crossover for whatever reason, okay? Do you sell down here on this bar close, or do you wait for a retracement back up to your resistance? You probably wait for a retracement. I mean, honestly, let's take a look at how tight that trade right there could have been. All right, right there. There's your crossover, so that would have been your sell. Okay, there's your sell. Where could my stop loss have been? Right there. What if I waited on my entry? What if I waited till a retracement back to the moving averages? You're only risking a few pips. Then you're trying to get in on a big runner. Does that work? If this is your risk right here, does this work with regards to your move? Heck yeah, it does. That's where your success will lie with these. With moving average crossovers, with moving average strategies, your success will be all about knowing when to trade and your risk versus reward. If you can dial in your risk versus reward and understand which time frame to trade, when to trade it, you can do okay with this. It gets hard when the market flattens out. That's why we trade all different ways. We have things for trending markets. We have things for rotational markets. And we talk a lot about those in our trading strategies inside of the trading room. Okay, everybody, let me see. Peter Timmy, hi, Shane. It's been a while. Hey, Peter, how you doing? Good to see you. RH Knight, hi, Shane. Are you paper trading today or live? Today I'm paper trading. Just doing a few things. I've seen some action in the crude oil. We took a short earlier. I took a short earlier this week on crude. Sold right from beneath $75. Was fantastic. And then also we sold right from about 75 and a quarter. Those were two good trades. As far as U.S. equities goes, I'm scared. I'm not scared of much. I'm not scared of much, really. But this type of news cycle, terrifying. Nobody knows what equities are going to do. This is huge. This is a big-time news story that's all over the board. Yesterday, what were we talking about yesterday? We're talking about annexing Greenland. We're talking about renaming the Gulf of Mexico. We're talking about striking up new deals and putting pressure on Canada. Okay. Take a look at the media running with this. Trump is considering a national economic emergency declaration to allow new tariff programs, sources say. So they're already setting the stage for this trade war and these tariffs that may or may not develop. Always remember that the tariffs are a negotiation tool. That's what they are. They're trying to bring things in line. I don't believe Trump actually looks at tariffs as a way to raise tremendous amounts of capital, although they do. But it's also a negotiation tactic. And right now, it's obvious that the Trump administration's coming in strong and trying to get after foes in the trade war to maybe get a little bit more favorable deals in a lot of areas. But here's the key. The key to all this stuff is this. The media coverage is explosive. They're jumping on everything out of the White House. That gives me big-time reason for pause when it comes to trading U.S. equities. That, and I'm pretty sure we're not getting an interest rate cut until the summer, and I think we might get a surprise rate hike this year. Very, very possible. All right, everybody, I'm going to go ahead and sign off for a while. Let me see. Love from India. Thank you, Nikhil. I hope you're doing well. Not live because the market is so choppy. Yeah, I'm not even remotely interested in the U.S. equities indices. To be honest with you, RH, I'm going to be looking to kick things off in full force. We're doing some things this week. I'm looking to get dirty next week. I want to see the NFP number. I want to see the dust clear a little bit. This week was a challenge because of the because we had to certify the election. We also had to we have NFP, we have jobs numbers, and each and every day there's a new headline out that is incredible from the financial media and just the broader media regarding the incoming Trump administration. I believe it's a very delicate time to be trading stocks. Very delicate. To be honest with you, I have a short side bias this year. We're going to wait and see how that plays out. But right now, you can certainly trade commodities. I mean, you can certainly, you can do very well trading commodities right now. Even our 9 EMA trade we pointed out to you here on gold, we're in the green. I think we're going to get paid. I really do. I think this thing rallies as the day closes. I'd be shocked if the U.S. dollar doesn't give anything back up above 109 on the DXY. We just got to wait and see what happens, guys. All right, everybody. Yeah, due to Carter's funeral, and that's the other thing. The NYSE is closed tomorrow. So you've got to be very, very careful with what you do, even on the Forex. If you're going to trade tomorrow, we're probably going to be talking Forex and crypto. But it's a hot Thursday news cycle. We've got a lot of events going, the biggest one of which is going to be your National Day of Mourning, and a lot of things can happen when the markets are closed. And then we come out into an NFP. Could be absolutely huge. Could be absolutely huge. All right, everybody. That's a wrap. You guys have a fantastic trading session. Trade the action well, and we'll talk soon. See you.